And I also stated that I thought it would take a substantial amount of negative data or some large unforeseen event, or even the thought of such an event could materialize, right? That thought to push the Dow below the 15.8. So we're starting to see that, aren't we? Right? There's some fear mongering going on out there. IMF and other organizations, analysts, there's some fear mongering. Worried about recession in Germany and all this and that. So the approach is not a rational approach. It's kind of it's almost planned panic off, right? Nonetheless, could we see below the 15.8? It's possible, you know. I can't pretend to predict or really know where the sentiment can take us. All I can tell you is I still feel pretty strongly about the forecast last month. The only difference is that a little bit stronger now. The downside is 16,000, although that was a similar percentage to the 16.5, 16.6, right? I can tell you this. I think that based upon what we see today, it would take some additional adverse news or adverse propaganda to continue without any really bad data that sent us below the 15.8, in my opinion, okay, or even below the 16. The key thing is to wait for a turn. You know, I'm pretty determined about keeping in that 16,000 range, 17,000 range. It would take a considerable amount of adverse news and or even sentiment to take us below that 16,000, okay? Or if it did, I don't think we'd stay there long. What we're experiencing right now is the largest amount of negative sentiment over this period, over this short period that we've seen in 3 years. So is 15.5 possible? Based upon what I see now, without any other adverse effects or fear mongering, I don't think it's too likely. But it is possible. Things could happen, right? The point is, don't get too worried. Bottom line, 16,000. If you see an inkling of a turn in the market, you want to start buying. Okay, aggressive. You know, you can duck in quicker if you see an upturn. And once again, we don't want to wait for 16 or 16.2. Just simply waiting and buying is not the approach, because the market's being driven right now by irrational behavior. We want to wait for some type of a spark, catalyst that's going to turn things. This is very different than what we've been discussing for quite some time now. That's why we want to be a little careful here. It would take some additional adverse news or adverse propaganda to continue without any really bad data that sent us below the 15.8, in my opinion, okay, or even below the 16. The key thing is to wait for a turn. You know, I'm pretty determined about keeping in that 16,000 range, 17,000 range. It would take a considerable amount of adverse news and or even sentiment to take us below that 16,000, okay? Or if it did, I don't think it'd stay there long. Okay, so this is the S&P from September 12th, October 10th, and once again, of course, we don't typically do a forecast of the S&P. If you'll recall from the September issue, I talked about this 1900 support pretty good. I said if we got that, didn't think we were going to, but I said, hey, it's a pretty good time to get in. Do I feel the same way? Once again, I want to see some type of a catalyst that shifts that sentiment. We can go lower. Until we see that, it's not worth to take the risk to get in. We want to wait for things to turn, right? And because the S&P has been a little extended, below 1900 would even be better, right? If you're aggressive, maybe the first thing you're going to do is bump into the S&P. That's fine if you're really aggressive. But you see the support there. Now, the upper range of the support is around 1880, 1870, 1860, right? And the lower range is about 1850. So I think most ideally, I'd love to see this thing, the S&P, trace down to 1850, 1860, right? That'd be a great buying opportunity. So I think most ideally, I'd love to see this thing, the S&P, trace down to 1850, 1860, right? That'd be a great buying opportunity. Once again, I want to see some type of a catalyst that shifts that sentiment. We can go lower. Until we see that, it's not worth to take the risk to get in. This is the 12th, 10th October, 12th September. 3-month chart, you can see it's already blown below this 43.50 down to the 43. That was the level I believe. I said, hey, you know what? That would be a good entry point for aggressive investment. But right now, because we still got this sentiment situation, we don't want to mess with it, right? Looks like it's trying to blow through this. So maybe it's going to blow down to the 4100 or 41 a little higher, right? So maybe it's going to blow down to the 4100 or 41 a little higher, right?